What's good, everybody? Welcome to the Billionaire 23 Financial Academy. This will be our very first video in what will hopefully be a long line of very instructive and informative videos regarding the nature of Forex, how to profit from it, and how to navigate it for long-term gain or short-term profits. That'll depend on the type of person that you are. So in this video, we will cover the very basics of Forex, meaning what is Forex as a whole. So what we call Forex is formerly known as the foreign exchange market. For those of you who have been trading for quite some time, I'm pretty sure it's common knowledge. But for those who are just starting out, it's good to have that information. So Forex, or the foreign exchange market, it closes, and I don't really mean closes as in it shuts down. It just takes a break around 11 on a Friday and then opens around 12 or midnight on a Monday, South African time. It'll vary depending on which part of the world you are and your time zone. I was just using an example using South African time because that's where we are based. So Forex is one of the largest traded markets in the world, with around $3 to $5 trillion circulating daily. So it's a very liquid market as compared to, let's say, the stock markets. By liquid, I mean you can get in and out of your trade fairly quickly. There's no drawdown time. You can enter a trade, and if you just feel like getting out, you can just get out of your trade. You can buy, get out, or sell, and then get out. With stocks and other, think cryptocurrencies, I think it's a longer process to kind of get out of the market because you need to go through certain verification processes and whatnot. So basically in Forex, what we are trading is the fluctuation in the exchange rate between two different currency pairs over a certain period of time. I'll make an example using USD JPY. USD JPY is basically the US dollar against the Japanese yen, but I will explain that later on in the video. So we have these numbers on the right side of your screen. We call these pips or price levels. Basically, when we trade, we are speculating whether price will be at a higher price level or a lower price level over a certain period of time. I can make a simple analogy using soccer. Let's say there's a soccer match going on between Barcelona and Real Madrid. Both sets of fans are expecting, or they hope that their team will win over a 90 period set of time. During that game, Barcelona might score, or Real Madrid might score. I'm just going to use these two as examples, blue for Madrid and red for Barcelona. So let's say it's 90 minutes. Over the period of the game, Barcelona scores, Real Madrid scores. The score is tied, meaning no team is winning. It's just a draw. In terms of price, we can look at this as price really hasn't moved from its previous point. It's basically still stagnant. But say now Barcelona scores or Real Madrid scores goal number 2. Real Madrid is up by a point. In Forex terms, the market has went up by a point or a pip or 10, depending on which value you want to use. So basically, the more goals are scored or the more pips price accumulates from your level of entry, it basically dictates how much money you will make. The opposite is true for Barcelona because they're losing in this instance. So let's say you open a buy trade. Just let me just get this out of the way. I hope the analogy made sense. Let's say you were to open a buy trade somewhere here. you would buy at this level. So if price were to go higher than where you initially bought, we call this being in profits. Price is now at a price level that is higher than where you bought at. So this would be regarded as profit. The opposite is true. If you bought at this particular level, but then price goes the opposite way, then you would be in a loss. If price goes the opposite way, we call this loss. So in Forex, you are going to have losses and you're going to have wins. The key is how do you balance the two, which we will get to in later videos in this series. I hope my analogy made sense. I hope we kind of understand how the Forex market works, how you make profits in theory. We'll get to practicals, but this is just a theoretical example. So in terms of currency pairs, as I explained earlier, we have USD JPY, which is the United States dollar against the Japanese yen. In Forex, we're trading currency pairs against one another's strength over the long term. So say now, okay, currently we have Mr. President Joe Biden in the White House. I don't really follow US politics that much, but I think I've seen on social media people complaining about gas prices being high and whatnot. If the economic condition of the dollar or of the United States of America is bad, it is likely to translate to the US dollar being bad. So if the strength of the dollar is weak, naturally the strength of the yen will be stronger. So if a certain negative occasion or instance happens for the US dollar, then the Japanese yen will profit from that. So let me just make a practical example. If there's a negative event for the US dollar, maybe taxes rise or there's some sort of natural disaster that affects the general financial market as a whole, it is likely to be positive news for its correlating currency pair or the currency pair on the right. So if something negative happens to the dollar, it's likely to be positive for JPY. So if it's negative for the dollar, it only makes sense to sell. It only makes sense to sell this currency pair, which is USD JPY. I'm pretty sure someone would ask, okay, yes, it makes sense to sell USD JPY, but it also makes sense to buy JPY USD. This is also correct. The only issue is I've yet to see a broker that offers this particular currency pair. Most brokers offer USD JPY, USD CAD. The dollar is basically on the left in most brokers. I've yet to see a broker where JPY or, for example, the euro is on the right. Mostly the euro is on the left. Same with the US dollar, but we will get to that in later videos. So I hope I've explained in detail, or at least tried to, how Forex works in a nutshell before going deep into currency pairs, pips, the spread, and all of that. This was video one. I trust it was informative. We're looking forward to teaching more and to learning more from everyone in the YouTube community. Please leave a like on the video, subscribe if you're new, if you've learned something of value. Mr. 23 signing out.